Good morning, everybody. This is Ospreyeye from MyChartCoach.com, and we are looking at ticker symbol NETE. Okay, there was this big drop today. The first chart here is the 5-minute chart, and as you can see here, there was this bullish uptrend yesterday, and yeah, net had been on this multi-day run, and today at the open, the middle Bollinger Band here at 30 support level broke, and then candles started forming below EMA's 4 and 8 and below the middle Bollinger Band. That's the pink and green line, or EMA's 4 and 8, and they've been riding those resistance levels lower and riding lower Bollinger Band support. So I mean, this is a very nasty downtrend. As you can see, the middle Bollinger Band is currently here at 30. A new uptrend on the 5-minute chart will not start until the middle Bollinger Band resistance level breaks. So yeah, so this is, and you can see here, this is a bear flag for future reference. See this big drop, and then you had this bounce that may have looked promising, but what it formed was this flag. See there's a flagpole. So you have a pull here, so on the drop, and then you get the bounce, and some people might have thought that, oh yeah, this might be it right here, but it failed. NETE failed to break EMA's 4 and 8 resistance and then drop back down. So that's what you want to keep an eye out for the next bounce. Is there going to be another bear flag going to form? Well, the key is going to be this line right here, the middle Bollinger Band. All right, so the bulls want to see the middle Bollinger Band break and turn into support, and that'll be the first sign that the 5-minute chart is heating up. If you look down here at the MACD line, you can see here almost crossed over, and see how it's pinched. So keep an eye on MACD. The MACD line is the green line, the red line is the signal line. A bullish crossover, the green line crossing the red line on MACD, would be your first bullish signal on this chart. So look for that, because there was this brief bullish crossover earlier today, but other than that, there hasn't been a bullish crossover. So for bounce players, if you're looking to play the bounce here, that's what you want to look for, a crossover on MACD. And then yeah, so let's look over here at the next chart. This is the 15-minute chart. So this is kind of a smoothed out version of the 5-minute chart, and each candle on this chart represents 15 minutes of trading, and this is a 3-day chart. And so yeah, you could see the candles were forming above the middle Bollinger Band at the open. This is the open here, and the middle Bollinger Band was tested, but it held, and then finally the support level broke here about an hour into trading, and that was the big red flag. So for future reference, if you're if you were following our charts, we put the warning out saying this chart was frothy, and keep an eye on the 15-minute chart tomorrow and look for support to break. This was very bullish yesterday. Candles were forming above EMA's 4 and 8, but like I said, if EMA 8 support breaks, which is the green line, then the middle Bollinger Band is tested, and that signals downside risk. So this opening candle here was your red flag. This is telling you, watch out, there's danger today. This uptrend is not is not sustaining. And then so you basically had 45 minutes to exit if you hadn't already, to take profits. And then by the time you got to this candle here, this is where the herd just jumped in, and everybody at the same time said, I'm out, I'm out, I'm out, and that created this big drop and the big volume spike. So for future reference, you want to be following the charts and be ahead of the herd. These people were ahead of the herd. You don't want to be selling when everybody else is selling. The saying is, it's always easier to sell into strength than into weakness. Okay, so right now there's a bearish downtrend on the 15-minute chart. Candles are forming below the middle Bollinger Band and EMA's 4 and 8. The uptrend will not begin on this chart until the middle Bollinger Band, which is at 34, turns into support. Yeah, see there's very big volume today. There was this bearish crossover, you know, when these candles were forming. And so that's what you want to do. You see the bearish crossover is confirming that the pattern is breaking down. So this was another red flag. See, when the MACD was pinching, you know, that was warning you that the chart's breaking down, and then finally crossed over. That was the major red flag. So the key is to anticipate the future price movement and be able to make your moves ahead of everyone else. So you got to think like chess. You need to think 2, 3 steps ahead. Okay, now let's look at the next chart. This is a daily chart, and this chart here shows that there was this break above the middle Bollinger Band on the 25th, and this started a new uptrend, this candle right here. And see the middle Bollinger Band is this dotted purple line, currently at 11.9, and so candles were riding EMA, basically EMA 4 and the upper Bollinger Band higher. I mean, this was like crazy frothy. Each candle was forming above the upper Bollinger Band, and then you had yesterday's candle that formed well above the upper Bollinger Band. And like I said yesterday in yesterday's video, that this was a big red flag, because the candles always work their way back into the bands. And then now, once again, that theory has been proven correct, because this big red candle has worked its way back into the Bollinger Bands. The upper Bollinger Band is at 291, and currently the share price is at 252. So something to keep in mind, you know, after multiple gaps and a big run, a candle forming above the upper Bollinger Band, this is an exhaustion gap. Okay, this is telling you that this is the move is crazy frothy. I mean, you had RSI was way up here in the 90s, and then, like I said in the video yesterday, Fasto was up here. I believe it was like in the 96 range. So that was telling you that there wasn't juice left to run. Fasto is maxed out at 100. So you know, there were so many red flags in this chart telling you that this is crazy frothy, that if you weren't taking profits on the way up, then you're just being a pig. And the saying in the stock market is bulls and bears make money, but pigs get slaughtered. So don't be a pig. You know, be a chartist, follow the charts, and they will lead to the pot of gold. All right, so going forward, EMAs 4 and 8 are the key support levels to hold. Bulls for you know, a stronger chart, you would love to see EMA 8 at 0.209 hold on this pullback, because if it breaks, if there's a close below EMA 8, that puts the middle Bollinger Band all the way down here at 11.9 on deck. Okay, so you know, if you're a trader, you know, you don't want to be holding it in between this drop. That could be a 50% haircut. So, but the key is that this new uptrend started. So as long as this middle Bollinger Band support level holds, the uptrend should continue. So, you know, we have trading theories about like how you could play this, and if you want to learn more about that, please come to our website, please come in our chat, and I'll let you know what the trade is here if EMA 8 breaks down, and how you would play the setup. Okay, so if you go up here, Fasto and RSI have corrected, you know, so that now they're both in the bull zone. 50 to 70 is the bull zone on RSI, and 50 to 80 is the bull zone on Fasto. So they have corrected, so now they have juice. This big red volume bar, okay, that's not what bulls want to see. You know, after a big run, you would like to see a pullback on light volume. So the big volume this early in the day is concerning. This is showing there's a lot of profit takers. You know, lots of people are ringing the register today. And if you look here at MACD, MACD is starting to hook. So after, you know, I pointed out yesterday the steepness of the MACD line. When the MACD line goes parabolic and it gets super steep, that is signaling to you an unsustainable move higher. So now it's starting to hook, and what bulls don't want to see is they don't want to see this start to curve down and then bearish cross. So you know, this is just the MACD line is reflecting this pullback here. But yesterday was the warning flag, so keep that in mind. Super steep MACD line signals danger. Okay, now let's look at the last chart. This chart shows the 50, the 100, and 200 day moving averages. And as you can see here, there was this big close above the 50-day moving average on the 25th, and then that signaled to us, that's another one of our theories, is a close above the 50-day moving average after trading below signals a possible run to the 100, and then if the 100 breaks, possible run to the 200-day moving average. And so this played out pretty textbook, because you got the close above here on the 100-day moving average last Friday, and that signaled more upside potential, and then that set up yesterday's move that hit up here. It didn't quite hit the 200-day moving average mark. The 50s were hit in after hours trading yesterday, so it got close to hitting that level. But the key are these gaps. Okay, now what are the gaps? They're the spaces in between the close of the previous day and the open of the following day. So this is a gap, this is a gap, that's a gap, that's a gap, and that's a gap. There were 5 gaps on this chart. Okay, and the key is this gap right here started a bearish pattern. Okay, it's called bearish 3 gap ups, and this is the first gap, this is the second gap, this is the third gap, and this created a very strong bearish reversal pattern. Those are the 3 gaps that created the current pattern, which is right here. It's called bearish 3 gaps up. And it's a 4-day bearish reversal pattern, and I'm telling you, when you see this pattern form, it confirms on a very high percentage of the time. I mean, there's been a couple, maybe a few exceptions to the rule, but this pattern is so solid for confirmation. When you see bearish 3 gaps ups form, just know that if you're long, that this is a very dangerous pattern to be holding during, because all the gaps create a reason to pull the chart back, and they signal that the run is just too frothy, that it's been overextended. This is also a beautiful setup if you like to short stocks, because the bearish 3 gaps up is telling you that there's limited upside potential, and so that's creating less risk. If you're trying to short a stock with bearish 3 gaps up, this is telling you that there's more downside risk for the stock than upside potential, which would mean, if you were short, upside potential for you. So this is a dream setup if you are a bear, and if you're a bull, for future reference, and I post charts, or if you see the bearish 3 gaps up, do not take that lightly, because this is a solid pattern, and today this pattern has been confirmed by this big red candle. So what does that set for going forward? On this chart here, bulls, you would like to see the 100-day moving average at 18 hold, and if that level breaks, then that's going to put up a 50-day moving average at 13 support test. If you like this video and this information and you'd like to learn more, please check out our website and check out our chat, because we do tutorial information all throughout the day, and our whole website is based on education. We're just trying to teach you how to chart and be able to analyze charts on your own. All right, thank you very much. Please check out the mychartcoach.com YouTube channel. Have a great day.